All right, it is talk time now, and the Central Bank of Nigeria has introduced new forex rates and would no longer trade the naira at 3.75 per dollar for all invisibles such as school fees, medical bills, and travel allowances.
Now, the regulator said Nigerians can now get the dollar at 360 naira across all commercial banks within the country. The CBN is to sell forex to banks at 357 naira to the dollar, while banks will sell to their customers at 360 naira to the dollar for invisibles like basic travel allowance, medicals, or fees. The Apex Bank has directed commercial banks to post new rates in the banking halls of their branches immediately.
CBN examiners are to visit banks to ensure the new rates are implemented and also prohibits banks from selling forex meant for invisibles to bureau de change operators. Okay.
All right, so we're now joined by an economist, Paul Igbinoba, and joining us also on Skype from South Africa is a financial analyst, Johnson Chukwu. Good morning, and thanks for staying with us on TVC Breakfast.
Hello, Johnson.
Yeah. All right. Let's,
good morning.
Good morning. How is South Africa?
Well, it's a bit cold, not like the smooth weather we have in our country.
I can imagine. Now, this naira, things looking up for the naira, 360 naira to the dollar. That is what the CBN is pegging it at. Are we saying then that Nigeria is getting out of recession, or is really out of recession? Or is this move by the CBN even sustainable?
Well, it's not a matter of getting out of recession or we're out of recession. The dollar liquidity that the central bank is trying to stimulate will ultimately lead to an improvement in economic activities. What is happening now is that the CBN has adopted a supply approach to the issue of the dollar. Unlike previously when they had the emphasis was on demand management, now they're doing supply management. And the more they supply to the market, the more likely that dollar will come down or depreciate and naira will appreciate. So focusing on the invisibles, which, like I always say, these are demand that are inelastic, to the extent that when you have a demand to pay medical bill, you must pay medical bill. If you have a demand to pay your child school fees, you must do everything to pay the school fees. So focusing on that segment of the market will actually create reduce a lot of pressure from the demand side. And that's what the central bank is doing. And also adjusting the rate to 360 simply means that the central bank is pushing to narrow the spread between the official rate and the parallel market rate.
Okay, all right. So let's come back to you now, Paul. The naira is making some gain, about 13 points, rather, 30% increase, rather, since the CBN started the liquidity of dollar into the system. What do you make of that?
Well, the ability of the central bank to intervene in the FX market is primarily responsible for the gain that we have seen.
Yeah.
And that also, as you know, is linked to the fact that there has been an accretion or an increase in our foreign reserves in recent times. Again, that is linked to the improvements in the price of crude oil and the fact that Nigeria too now is able to produce more crude oil because of the relative piece in
foreign
the
reserve
Niger
is about
Delta.
$31 billion.
Now.
Okay, $31 billion now. Okay, and that's just because of the positive developments in the international oil market, primarily. But then the issue is the intervention of central bank. Is it sustainable? Because
that's a question.
We are not sure that improvement in foreign exchange inflows on account of oil is sustainable, because already, as we know, the price has dropped now to about $50 per barrel.
Yes.
On account of increase in shale oil production in the United States, and the fact also that non-oil producers like Russia and others are probably not holding on to the agreement to maintain the cut in production. So these are the, but certainly in the interim, yes, the naira has gained in the last 3 weeks.
So by extension, you're saying that we should look at our export based on other ways of getting dollars into the system?
Yeah,
like what?
But that cannot be in the very short term.
Like what?
Because right now, I mean, if you read the economic recovery and group plan, it was revealed that Nigeria depends now
on oil, largely.
to the extent of not just 90 but 95% for foreign exchange inflows, and that is a structural problem that can be solved in a very short term.
So you're saying if this trend continues now, that if the crude oil price keeps dropping, we might go back to having scarcity of dollars again?
Yes, that's why the present approach of CBN may not be sustainable in the medium to long term. So it still goes back to what else can the central bank do? But really,
and that's
all right, I would like to take you up on that, definitely. When we come back, let's take this to Johnson Chukwu there in South Africa. So that means we cannot safely say then that the worst is over for the Naira, with the CBN flooding the market with dollars in 3 tranches so far.
12 tranches.
How many tranches?
12
so far. Okay. Now, so it's not yet uhuru for the Naira. Would you agree with that? Are we still, how vulnerable are we still if the oil price goes down?
You see, basically, just like Tunde said, CBN ability to sustain the current or the supply management they have adopted is not able to generate enough foreign exchange earnings. Those foreign exchange earnings are largely coming from oil sales. Yes, we have had an improvement in production, and we also have a reasonable level of price at about $50. But earnings at $50 per barrel is not enough to meet our natural demand as a country. What I mean by natural demand is the average volume of imports that meets the demand in the country is not enough to meet it. So we need supplementary inflow sources. Those inflow sources will come in the form of foreign direct portfolio investment and direct investments. But unfortunately, foreign portfolio investment has not started coming because we have not achieved market-determined exchange rates. We cannot say we've achieved liquidity in the forex market. What we have is a supply management where the central bank is pumping dollar to specific segments of demand. So that does not equate to market-determined rates. So that will not allow foreign portfolio investors to come in. The foreign direct investors are not coming. They are not quite aggressive because obviously the government has not done enough to present itself as willing to accept inflows from foreign direct investors. So you need those 2 sources of inflow to help improve the supply side such that in the medium to long term, the inflows will meet the demand. Basically, for the central bank to sustain the current interventions, then our earnings, our foreign exchange earnings, must at the minimum be enough to cover for our imports. But unfortunately, that's not the case here. So what we're dealing with is a short-term measure, hoping that this short-term measure will trigger foreign investors and foreign direct investors. Okay. And it's only when that comes that we will talk of, okay, we have achieved uhuru in exchange rate.
All right. Gentlemen, stay with us. We'll go on a short break right now and return with more.
Right, you're welcome back. We're looking at Naira's steady gain. How sustainable is it with an inflation that fell from 18.7% to 17.8% in February and an NPR that's still around 14%? These indices strong indications that the Naira indeed will remain strong. For how long? Okay, our guest in the studio, of course, is Paul Igbinoba. He's an economist. And joining us from South Africa is Johnson Chukwu of Carry Assets Management, a financial analyst. We've been looking at this already together. But before we ask more questions, let's bring you some more information. Nigeria's federal government is already taking the needed actions at ensuring that it eases the economic hardship the nation is currently facing.
The government is also taking key economic decisions that seem to be turning the tides as the value of the Naira continues to shore up against the dollar. From a high of about 520 Naira against the dollar in the black market, the Naira crashed to about 390 Naira at the parallel market over the weekend. Many
Nigerians say they believe that the economic woes bedeviling the country would soon be over. But before this sweet relief, the naira witnessed some very dark times. Let's take a look at how the foreign exchange crisis began. Now, when Muhammadu Buhari clinched victory in Nigeria's presidential elections in March, stocks soared as investors looked to the former military ruler to reverse the decades of economic mismanagement and policy inertia.
May 2015 presented a bleak image with a low point of 218 naira against the dollar. But as of December that year, the figure sunk lower to 251 naira as the value of the naira continued to drop. Inflation started soaring, hitting all-time highs, back-to-back rather.
And in 2016, New York Times rated the naira as the world's worst performing currency as the exchange rate quickly hit the 300 naira mark in January that year. As of December 2016, the naira was trading at 486 to the dollar in the black market.
The trend continued into 2017. In February, the Central Bank of Nigeria intervened in the forex market by introducing new policies targeted at harmonizing the rate of the naira and dollar in different parallel markets over the past few weeks, when CBN has injected about right now they've injected about $2.2 billion dollars into the forex market.
And the naira traded at 440 last Monday, while it closed at 390 to the dollar last Friday. And the naira keeps on appreciating, selling for between 375 and 380 naira per dollar. Now, the central bank says it will sell the dollar to consumers needing to pay foreign school and medical fees and travels at 360 naira.
But it's not business as usual for bureau de change operators. The Association of Bureau de Change Operators of Nigeria says CBN licensed BDCs incurred regulatory losses of 130 million naira last week as a result of the CBN's massive interventions in the forex market. Paul, the BDCs are crying, really. One of their cries, really, is they want more forex from the Central Bank of Nigeria, and that the margin of their selling to the public should be increased also from the Central Bank of Nigeria. How would that work?
Well, really, the situation we have now is really in a flux, in the sense that Central Bank is, poised to close the margin between the parallel and the interbank rate. And in that process, there's going to be gainers and losers. And in the interim, I think the black market operators, as well as bureau de change, are the ones who probably will lose the most. Really, there's no clear-cut policy or formula that can address that. CBN can only just manage that the best way they can to ensure that that important stakeholder doesn't lose.
In terms of demand, in terms of what they need now, the BDC say they need more dollars.
The truth is, CBN is best placed to determine that, how much more they need. It's an issue that can be sorted out between the members of APCON, the regional operators, and Central Bank. But looking at the broader policy issues and the goals that CBN is trying to achieve, the point is that for as long as Central Bank is working hard by pumping in more dollars, into the market, and of course this money goes primarily to banks to take care of invisibles. Of course, invisibles means services that Nigerians are demanding abroad, like school fees, basic and personal travel allowance, and medical fees, and all that. Now, these are the very requirements that many Nigerians used to source from bureau de change and from the parallel market or the black market. For as long as Central Bank continues to give these huge funds to the banks, that's going to reduce the demand by Nigerians from these other parallel alternative sources.
So these moves will actually work in the short to medium or even long term?
It's working. So really now it's even difficult to determine how much really the bureau de change people really need, because because CBN's policy is to crash those rates.
Okay, what about in terms of
and the activities of speculators? Let's bring in Johnson here. Now, I mean, you are a player in the financial sector. Government plans to take out speculators because at the end of the day, they are the real reason behind this misfortunes hitting the naira. Do you see any loopholes that these speculators may still take advantage of or cash in on to reverse, whatever gains we're making with the naira now?
Well, let me correct an impression that people have held, that speculators are the problems that led to the crash of the naira. No. The naira crashed because of policy inconsistency. And I'll emphasize some of those things to you. At some point, there was a policy that you can't pay cash into your domiciliary account. At some point, there was a policy you cannot transfer your cash lodgement into your domiciliary account. If you make a cash lodgement, you can't transfer it out of the bank. There was a time when they said you cannot access your payment for your school fees from your banks. So those things created higher level of uncertainty. They created the need for people to hold dollar cash. So, and people saw that up. When we talk of speculators are people are saying, look, this is likely going to be the trend. They take position based on that, the assumption of what the future holds. And that's what we call speculation. And basically, when you create an environment that heightens the level of uncertainty, people are going to try to make informed guesses. And when they make informed guesses, they try to take advantage of those guesses. So what has happened in recent past that the guesses, the bets have reversed. What people are now betting is that dollar will depreciate or naira will appreciate, and therefore people are exiting their holdings in dollar cash or dollar balances, which is the key thing about policy management. Policy management is about giving people the confidence that you have the capacity to meet the obligations as the need arises. And that is what the central bank is trying to do now. You see, basically, we got to 520 or at some point because there was total loss of confidence in the naira because people felt that there was no plan to supply naira to the market, and therefore they saw naira as a depreciating currency and decided to hold dollar. So speculators are not the problem. Speculators only take advantage of economic policies that present themselves. The key thing is this: we need to evolve a policy management plan that specifies what we want to, how we want to position our currency. Normally, for a country in our current situation, you have to make your currency relatively weak to make imports expensive and exports cheap. You cannot have a very strong currency if you do not have a very robust export base. So we need to define how we want to position our currency. And then we now use the combination of demand and supply management to achieve a market-determined exchange rate. That's what was lacking. So initially, series of announcements, turns and twists in policies created a high level of uncertainty and made people want to exit naira assets and hold dollar assets because at that point, naira had shown consistent record of depreciation.
But that's what the CBN is doing now in terms of demand and supply, like you rightly mentioned earlier. But that which people are more concerned about is the sustenance, which brings in the issue of the export base. And your suggestion was the FDI and the foreign portfolios. But beyond that, what export can we have in the interim that could help shore up this lapses?
Well, a couple of things that the central bank needs to do, not just the central bank, the fiscal authorities. One, in the medium term, because our foreign exchange earnings is not enough to meet our foreign exchange expenditure. The fiscal authorities need to continue to assess dollar-denominated loans. The boost you saw in the CBN's capacity to intervene, the increase we saw in the foreign exchange reserve was largely driven by two factors. One, improvement on crude production, which is basically the role of the fiscal authority to make sure you have peace in the Niger Delta. And the second factor is the fiscal authority's ability to assess dollar-denominated loan, particularly the 1 billion euro bond. Currently, they are about 3.2 or 3.4 billion in the pipeline that the federal government is trying to assess. There's a 1.3 billion that's supposed to come from the China Exim Bank. There's a 1 billion that's supposed to come from the World Bank. A 400 million balance due from the African Development Bank, which was predicated on the government releasing an economic plan, and there's a $500 million euro bond that government is about to access. If they are able to access those loans, they will further boost the capacity of central bank to intervene in the medium term. but in the short term. The medium term plan will have to do with, one, are they assets we want to sell? Are they assets we want to concession to bring in foreign direct investors? And the third factor is how do we diversify the economy so that we become we have more products to export.
All right, Johnson Chukwu and, of course, Paul Igunoba still remain with us. We'll take a very short break and return. Right after that, Foladele will let us know what the people are saying. Right, you're welcome back. If you just joined us, you're a bit late to the party, but there's still time enough to look at the gains that the Naira is making. That's what we're looking at this morning. But at this point, let's bring in Foladele to tell us what the people are saying out there. Fola.
Hi again, ladies.
Hi.
Hello. Good morning, Paul. Good morning, Johnson. Let's see what Nigerians are saying online about the game. Okay, first one from Oyenkuzi, who says, Nigeria has an export problem, not an import problem. If we were selling a lot more than just oil to the world, Naira would be more stable. I'm going to take you up on that later, Paul. Herod Daimler says, and this was in reply to the first tweet, and it says, we don't process goods well. That is one of the reasons why our goods are rejected at international level. GOU tweet says, I probably never truly envisaged the day when the Naira would have fallen to 380 to $1. Keep falling, hashtag Nigeria. One of the few times you would hear that prayer.
That's when falling is a good thing.
It's a good thing, exactly. Financial Planning says, it is important we don't celebrate strong Naira. That kills the economy. If one Naira becomes $1, Nigeria cannot pay salaries.
Really?
AS Ariwa says Naira is now 385 to $1 this morning, but it won't trend like it trended when it was 500. Nigeria will be great whether or not you like it. And someone replied to that saying, two things trend, good news or bad news. This is neither. Until it is back to 200 Naira, it won't trend.
In any case, the government promised us 1 Naira to $1.
Yes, exactly. So let's talk about that.
News when that happens, really.
Let's talk about that, Paul. I know I wanted to talk about the import-export tweet, but I think this is even more interesting, the one about the 1 Naira to $1 thing. Apparently, that's not a good idea, and we shouldn't be praying for that.
Well, certainly that's never going to happen, and it also doesn't make economic sense anyway. But assuming it can happen, it means that, okay, like the fellow said, it will reduce the ability of the government to, monetize the dollar, revenue, because our foreign exchange income still produces 70% of government's revenue that what to spend locally. All right, and that's because by the time you monetize, you exchange the dollars to Naira, it gives you a huge volume to pay salaries and other things. So if the dollar and Naira are now one-to-one, that has really reduced the ability of government to monetize, its dollar income for local spending.
There was a time when the Naira was, it was even 80 kobo to the
dollar.
Kobo,
exactly.
But that's a very long time ago. Things have changed dramatically.
Okay.
We are not there anymore. But I think the issues about the foreign exchange market, improvement in the dollar Naira exchange rate, again, firstly goes back to, as we've said, the ability of central bank to intervene because it has quite some huge chest, quote unquote, now.
Right now.
$30 billion.
31.
Okay? But again, that is just a short-term thing.
Yeah.
Right now, there is no true market. There's no true market for foreign exchange in Nigeria. Because to have a true market, it has to be supply and demand. What we have is federal government, the central bank allocating dollars to the market. All right? That's not a true market.
So it's still not a matter of demand and supply determining.
There's no supplies coming in.
And with this move now, Johnson, back to you, Bofoladele, we'll have to let you go first. Back to you, Johnson. This move by the CBN to peg, is that the correct word, really? The Naira to the dollar 360, and it says that it will actually send examiners to visit banks to ensure compliance.
That's for commercial banks.
For commercial banks. Now, is that a step in the right direction? And where is the place for demand and supply here?
Well, let me start by saying that Naira can actually be 1 Naira to $1. But first, there has to be a redenomination. If you do a redenomination today, and you are taking out the 2 zeros, which also means that those who are earning 1 million Naira will begin to earn 10,000 naira. So you will have a naira exchange rate of 360 kobo per dollar. That is if you do the denomination, but it doesn't really change anything. But back to the issues. What the central bank is doing is, you won't call it pegging. What they are doing is to define the range for the currency. Like now, what they say, they will be selling dollar to the banks at 357, and the bank should mark up by 3 naira. Remember, until recently, they were selling at the price we are marking up. They were selling, banks had to sell at the market for 375. So what they are doing is not really a pegging. A pegging will be a fixed exchange rate, and that is not the case. But having said that, I agree with you that in the first place, we do not have an active foreign exchange market, which is why, as I mentioned earlier, the foreign portfolio investors are not going to come. For you to attract foreign portfolio investors, you must have relatively stable exchange rates, and then you must have liquidity in your foreign exchange market.
All
Both
right.
we do not have now.
Okay, Johnson, let's bring this discussion to the public domain now, to the ordinary people, you and I. The gari you buy in the market and the palm oil you buy to cook your ogbono soup. Nigerians will say, okay, fine, the naira is making some gains, some steady gains right now, and the price of oil is doing so well. Why is the inflation rate and the purchasing power of Nigerians still weak?
Well, the reason is this: you have what they call lag effect. There's always a lag between the policy action and the reverberation of that action on economic factors. Today, the goods you have in the shop floor or the shop shelves, we are imported about 450, 480 naira to a dollar. So the goods that are being imported, that will be imported at maybe 380, will come in maybe a month time. So it's only then that the shelves will begin to reflect the prices at which the importers bought exchange dollar. Today you can't see that because there's always that lag. So it's not as if price will not adjust, but it doesn't adjust instantaneously because the prices will reflect previous actions or previous investments. And that is what delaying the drop in price. I expect there will be consistent drop in prices. But beyond that, there's also what they call base effect on inflation. As at last year, the inflationary uptick we saw occurred early last year. Particularly by the time you get to May, when inflation moves to 15.58, you're going to see a reasonable reduction in the inflation rate. You're going to see inflation rate in the lower double digit by the time we measure May inflation. So you're going to see two factors that will bring down price levels. One, the base effect on inflation, and then the fact that goods imported at lower exchange rates will be coming into the shelves in the next 1 or 2 months.
Okay, back to you, Paul, before we round off. The monetary policy rate is still 14%. Would it be too early to begin to look at actually reducing that? And then secondly, the CBN has been warning speculators to sell their dollars. Is it in the place of the CBN to give such orders, or like some say, doesn't it even amount to insider trading, to say they will be incurring losses if they don't sell?
Well, firstly, talking about the MPR, the monetary policy rate. You see, right now, I don't see any prospect of that rate being reduced in the short term, in the next 3 months, because CBN is actually trying to mop up excess liquidity. And that's partly the reason why they've been able to succeed so far with their plan to crash the parallel market rate vis-a-vis the official interbank rate, because banks don't have sufficient liquidity to buy foreign exchange. So central bank in the short term will maintain that policy.
Yeah, let's get it clear. Excess liquidity of the naira,
of
not
naira.
So
they're trying to ensure that there's not enough naira chasing dollars. All right, that way you will reduce demand for dollars, naira-driven demand for dollars, and that's one way to actually reduce the exchange, because when demand for dollars is reduced, the rates will crash. And that's the reason why they will not change the MPR of 40% in the short term. Okay, but talking about speculators, left to be is really neither here nor there, because our market is not yet that sophisticated to have these speculators who are so, you know, so
Strong,
strong and so loaded and all that. In more developed financial markets, speculators actually are institutions. They are not just the man on the street. They're institutions, all right? All right, and these are fellows who have been there for a long time, and they really will look out for policy arbitrage or loopholes, all right, to make a gain. Our market is not yet that advanced. I think CBN is just creating this scenario of speculator.
But
the real issue
yeah.
is not speculator. The real issue is policy vacuum. We really have to face the real issue. The real issue is that let's create a real market. Let us liberalize the market. Let's have a transparent pricing of foreign exchange, all right? Until there's transparent pricing of foreign exchange and there's stability in the policy framework, foreign direct investment, FDIs, will not come in, portfolio investors will not come in, and the dollars will not flow in. And CBN will continue to manage the situation which is untidy, and things will not just be stable.
Let's quickly bring Johnson on the issue of MPR. Let's have your opinion on the MPR still pegged at 14%, and the cash, the reserve ratio, all the inches, they are still the same thing. Or is that still a good thing?
Well, the key thing about the cash reserve ratio and the monetary policy rate, in the case of Nigeria, what actually has more effect on liquidity is the cash reserve ratio. The monetary policy rate is just a guide for banks to determine what should be the interest rate or the base rate. So if the central bank should reduce the cash reserve ratio, they're going to inject a lot of liquidity to the system, but which they will not do. Like Tunde was spot when he said that today the central bank is managing local currency liquidity so as not to trigger increased demand for foreign exchange. As of last week, I know the interbank market opened with a negative of 300 billion negative. And it was only when FAC came in early this week, late last week, that we saw a positive net open position for the banking industry. I mean, net liquidity for the banking industry. So the central bank is doing anything, and that was why when the central bank offered $400 million, only $81 million worth, but because the bank didn't have the liquidity. So what the central bank is doing, they're trying to constrain available naira liquidity so that the banks do not have so much liquidity to partake or invest or grant credits to their customers so that the demand for FX will increase. So I don't see the central bank reducing, particularly the cash reserve ratio, which has an instantaneous effect on the level of liquidity in the economy.
All right. Gentlemen, we have to say thank you so much for your insights on this particular issue, the Naira steady gain. That's what we've been looking at on Talk Time this morning. Johnson Chukwu, Carry Assets Management, thank you so much for joining us from South Africa. And Paul Igbinoba.
So casual today, Johnson.
Yeah.
It's because you're in South Africa.
I'm sure he's preparing to have breakfast.
Thank you for joining us.
I'm to a conference.
Okay.
All right, get back to us as soon as you can. All right, Paul Igbinoba, economist, thank you so much. It's always good to have you on the show. And that's where we wrap this morning on TVC Breakfast. We look forward to having you join us again, same time, 7 a.m. prompt tomorrow. I am Ngozi Ali. Will have a beautiful day.
And I am Busola Mitunwashe. Bye for now.